81.40. That's a shitty fill, huh? Right to all-time highs, and then it just kind of I almost said, what's her name? Amber Heard. Hey, Craig. I'm gonna blow in the candle here. One of those Australian type of dogs, right? So one day is Thursday, December 19th, 2024. This is a week in charts. Obviously, I want to thank all you guys and girls for attending. I appreciate you taking time out of your busy schedule to be here. So what are we talking about? Well, current market conditions, obviously. I'll have plenty to say about that. Your questions on trading, your favorite stock and crypto picks. The methodology in action, got a lot to talk about this week. New mystery charts, TFM 10% system. And I got to thinking right before I went live, what if we did that with Bitcoin, or about an hour before it went live? So I did a little research there real quick, and I find it really interesting, but I'm a nerd. I want to talk a little bit about the Landry 100, and then I want to resume my discussion on, or continue my discussion on a million little things. And obviously Q&A. There's a disclaimer screen. As you know, you can lose money trading wars, often summing up. All predictions are about the future. And a lot of stuff can happen between now and then. I think Greg Morse for that. He leaned over to me in the presentation and said that once. That was kind of funny. Anyway, there's my contact information. Feel free to take a screenshot, obviously. And my email is dave@davelandry.com. All right, let's talk about the mystery charts methodology in action. We have one leftover mystery chart, and we have one new one this week. And this one now has become it's a new mystery chart, but it's been recommended for a few days, and now it's become a Landry Light pullback. By the way, that fascinates me, as I've said many times, that a lot of times some of my best setups, you go back and they come from the most simplest of setups. And some of the biggest winners we've had, especially this year, have come out of Landry Light pullbacks. Just a really simple pattern. You want about 10 or 20 days of upside Landry Light, meaning that lows are greater than the moving average, and then you look for a little kiss of the moving average. In other words, the Landry Light goes to 0. And I'm using the 30 EMA for this, and you see a nice little pullback. And this is an IPO, so this is a nice little, this one kind of took off with a bit of vigor and has since pulled back. Here's the parameters: entry, stop, IPT's initial profit target. As you know, or you may know, we take partial profits at the IPT half. There's the entry, there's a stop, and there's the initial profit target. So we'll see if it triggers, and I'll follow up with it in future webinars. So this one's still a mystery chart. This is one I was thinking about. It did become a Landry Light pullback last week. I think it was just above the EMA, but you can see we actually have one little tiny bar of Landry Light, little inside day below the moving average. So Landry Light again, lows greater than the moving average. That is illustrated down below. And then we pull back to the moving average. There are your parameters down below. Entries here, stop is here, and IPT is up here. And by the way, this one did kind of make like a double top, and initially, and what I was telling my peeps is to kind of use your mind's eye and put these bars together, like a weekly bar for these 5 bars or so, and that would give you a knockout looking bar. So double top knockout, you get a little minor double top, like peak 1, peak 2, and then bam, knockout bar. So this is kind of similar to that on a conceptual basis, okay? And conceptually correct basis. I got an email just a few minutes ago, and I put this in the Facebook group. We're long the stock, and I tell you, it's been frustrating lately, obviously, but we've had some stocks in the portfolio sort of take off and then come back in, and take off and come back in. And yesterday and today were kind of like a come back in type of thing. In fact, this one sort of took off earlier this morning. And I got the email, like I said, right before it went live, and he said, I always post my profit taking orders as LMT, GTC, that's limit, good to cancel, active doing both regular and after hours trading. Now, with the core methodology, I normally don't do that. And one disadvantage of doing that would be that, let's say you have a nice big fat gap tomorrow. It doesn't happen all the time, but every now and then it does. We had one recently, and then not so recently, that had really nice gaps overnight. NNE comes to mind, and there was one fairly recently that kind of took off, but then came back in and we stopped out. But we did get more than the 1% overall in the first loaf because we had an overnight gap. Now, I will do this in IPOs, not all the time, but quite a bit. And I've had it happen like in after hours trading on the same day I get in, and it's absolutely amazing. But sometimes with an IPO, when you're getting in on like a buy at B, you know, it's kind of a scary pattern because you're buying into that close and you're kind of just stepping into the unknown. Whereas when you're buying in the middle of the day, you kind of see the market rally up a little bit, or the stock, I should say, the stock rally up a little bit, and you see the trigger, and you kind of know how it shakes out. And but just kind of, it takes a lot of faith to buy at the with the buy at B pattern. But I love it. I find them kind of fun to trade. But anyway, you're buying that new closing high, and sometimes that market might already be extended. So I'll put in an order, good till cancel in after hours, and a lot of times I'll get hit on that order, and I still have my second low. So I'm kind of throwing this out there as not me telling you to do this with the core methodology, but just as kind of a thinking out loud thought process. And I think in great markets, you probably don't want to do this, but in markets like we are in now, a limit order good to cancel, meaning that it's going to execute in after hours if hit, might not be a bad idea, because sometimes crazy things happen in after hours. And this is what he's saying here. The IPT on this one was, I don't have it labeled, but it's 315, as you can see down here. And by the way, if you want to see all of these trades, warts and all, davelandry.com/archives. And if you're watching the recording of this on Friday the 20th or later, there's a link down below for that. But anyway, so he had a limit order in. He got hits on that limit order, and after hours, you can see it came right back in. So this is kind of a feed the ducks while they're quacking. Or as I used to say a long time ago, let them have it. And there was I think it was Frankie and Johnny's or whatever. Anybody from around New Orleans? I don't know if it's still there or not, but they used to have these stupid commercials, and they had this big fat black man that would sit in the back of the place with a big cigar. And when people come in like, I'm on Social Security, I don't have no credit, I don't have no money. It's like, and the big dude would say, let him have it. He was a let him have it man. So that's kind of how I feel in general with the initial profit target is let him have it. And I guess that I gave that speech locally, and it made a lot more sense in New Orleans because of the, I think it's Frankie and Johnny's. But anyway, maybe there's some on YouTube. So just kind of throwing that out there. Again, I do it in IPOs quite often, usually in an IPO, because to me, it's like a game. You know, you're getting in on a close, you're like, oh, geez, what's going to happen? I wonder what's going to happen. It's not like you're getting in on a pullback in the middle of the day, position trading. And you can kind of see how it shakes out, good, bad, or indifferent. Whereas the buy at B, you're buying a close and you're kind of stepping into the unknown. Both are stepping into the unknown, but it seems like it's a lot more unknown with the buy at B. And a lot of times you'll get that, I'll get a zing. I'll still be working on my trading service or whatever, and I'll get a zing, and it's very exciting to get that fill in after hours. So not that I'm trading for excitement, but I think it's definitely something you might want to do with the buy at B. I need to think about it with the core methodology. Now, the thing that I was thinking about is with the core methodology is you still have that second low should everything go crazy and gap and all. So it's something to kind of think about. And, you know, how often does it really gap open and do that? Okay. Dave, do you have any rules when it comes to sector risk, total portfolio per sector? That's a tricky one. As a general statement, my official, unofficial rule is in the core portfolio, two stocks in the same, two full positions of the same sector in the portfolio. Now, if one hits the IPT, and well, let's just say they both hit the IPT, so now you've gone from 4 total down back to 2, 4 pieces of a position. Let me just rewind that so it'll make more sense. Let's say you have 2 full positions and then you sell half and sell half. Now you have 2 half positions. So you've got 2 half positions in the same sector. That's only 1 full position. So now you've opened up a slot for another position in that sector. Now here's where it gets a little tricky, and that's kind of what I was alluding to earlier. Sometimes you could have a stock that'll trade a little bit different than the overall sector. You can have something that's really hot, especially like an IPO or whatever, and some of these little hot areas lately, quantum computing or something like that, where it's okay to go in and do some things. Sometimes biotechnology could be like that too, where stocks could trade kind of independently of the sector themselves. So we could certainly flesh that out a little bit more. And Nick, and if you have any more thoughts on that, we could talk about that. I'm going to go through the TFM 10% system pretty quickly. because we've covered it in a lot of detail. If you want to go in and learn more about it, there's plenty on my YouTube channel on that. And in fact, I spent a lot more time last week than I intended to. In fact, every week I spend more time than I intend to on that. Looking forward to the day you published a list of a million little things. Yeah, I'm working on that. I need to start. I've got a master list I'm working on, but I forget to put them in every now and then. It's really easy to keep up as you go, but with over time, it begins to add up. Anyway, so here's the P's with TFM 10% system. These zones here, 0% means that you're at 50 week highs, not 52, but 50 week highs. And I use 50 versus 52 probably because I was using a 50 simple moving average. But anyway, so right there, the market is 0% away from its 50 week closing high, okay? And then this is within 5%. This is more than 5%, and then down here is more than 10%. And the idea is to just get out of the way when you close below the moving average, which is my whipsaw filter, and more than 10% away from the 50-week closing high, you exit. So the last exit would have been right there. And then the last buy, you need 2 bars of Landry light. Buys a little bit more stringent, help keep you out of trouble. Bar 1, bar 2, so the buy would have been on that close. And again, as I repeat often, this is on a calendar basis. The system was designed, and that's just purely by accident. It happened to be that stock charts where I got the data from uses a calendar basis. Some other charting packages use a rolling basis, so like Thursday to Thursday, Wednesday to Wednesday, etc., as opposed to only Friday to Friday on the weekly charts. And so far, in back testing and in walk forward real-time testing, which includes some real money, which I'll show you in 1 second, the calendar basis versus the rolling chart doesn't seem to make that big of a difference. But anyway, we had a pretty big sell-off. You can see we're still in the green zone. We're still within 5% of that 50-week closing high. The sell will be way down here at 54.36, if my eyes are working. As I've said ad nauseum, I took 100 shares a while back, and you can see the actual trade. And last week's we could chart every now and then. I'll put the trade in to show you. And I'm still long that, and the stop would be right there. And this gave up about $1,000 from last time. In fact, you can take a look at this. It's down 14 points. I guess Friday to Thursday, if that's how that chart works. So that's kind of an ugly dip. That's $1,400. But I seem to remember we were up right around 20,000 and change, and now we've given up $1,000, or I've given up $1,000 on that one. Anyway, as I said quite a bit, one thing I wanted to show you, or continue to show you, I should say, is when you're in longer term trend following mode, your drawdowns can really be abysmal. And that's why I like to take a hybrid approach. And that's what we're doing with the core methodology. And even with the IPO stuff, we're taking partial profits to help kind of mitigate those drawdowns. And on occasion, when we're able to ride out a trend for a long, long time, you will still get those big drawdowns, but they're kind of mitigated because, I hate to use the term the market's money, but you're kind of playing with the market's money, and you already took some profits off of the table. And that's why when you look at the spreadsheets in the service, when I show the spreadsheet, it'll show where we took the partial profit. It'll have that as the slot still in place, even though the trade has come off. Half of that trade has come off. And then that's so you can see how the entire trade worked out in the live portfolio that I show every day to my peeps. Anyway, you can see these drawdowns are quite substantial. And this one, truth be told, hurt a little bit, $8,000. Now, when I got in this, as I've said ad nauseum, I thought it would just be kind of like an S&G type of thing, like, oh, I'll get in and we'll see what happens and blah, blah, blah. And it's 100 chance, who cares? But now it's beginning to turn into some real money. And $8,000 is $8,000. It's a pretty serious drawdown. And you can see on that last little leg down, should it stop out, and I hate to use the word hope, hopefully it doesn't, that would be, what was that, $6,600, I think? Yeah, $6,600 drawdown, which would suck, but it would still make a little money overall. 14K or so. Anyway, as I said, late in the day, I was thinking, what would happen if you did TFM 10% in Bitcoin? And one of the first things I thought about was the bands would be way too narrow. You see your little green band up there because Bitcoin is so volatile. Now that's gonna begin to change a little bit over time as the prices get higher and higher and higher, and the market begins to mature a little bit. It becomes more efficient, and all these derivatives coming on. But anyway, you can see the bands are really tight. Now the only reason that I think it works with these tight bands is because the 50 simple weekly moving average is just so far away. And that's why it works, because that's part of the rules to the system. Again, that's the whipsaw filter. Oh, by the way, over here, MS Dev says, looking forward to the day you publish the list of a million little things. If you go to my YouTube channel and you go to Trader Quick Clips, every time I do a million little things, I throw it over there too. So that's probably where you can get the easiest way to get them all. But that's really, I know you want to party with me, but that's really been a lot of fun in that series. And I have something I think is really cool this week. You know, everything turns to trading. My wife's like, look at this dog. And I'm like, oh, okay, we could make that into trading. But anyway, when I looked at the first trade on this, I was pretty impressed. Bitcoin was at $371.56, and it ran up to 7,062. So that's like 362. That's like an 1,800% gain. So I'm like, well, wait a minute, this thing might work, almost 1,900%. And the other thing I noticed fairly quickly was the drawdowns are abysmal in Bitcoin. Okay, it's a volatile market, and I think it's going to dampen a little bit over time. But just remember, and I don't know who said it first, but it's very important to remember that and this is something I tell man on the street, you know, people in the gym, they start asking me about markets and all. I'm like, well, that's fine. But just remember that every asset class will lose at least 50% of its value at some point in its lifetime. And I've seen some pretty big spills, obviously, in my lifetime in Bitcoin. I've seen the stock market go down more than 50% a couple times. I think it went down 70, I always forget, 73%, the NASDAQ, that is. And then obviously back in the 20s, the P's lost about 90% of the value. But anyway, I did this first little trade back test or whatever, so to speak. And it got me thinking that, okay, well, maybe there is some merits here. I've always thought that the zones, it wouldn't work because of the zones, but turns out it actually does work if you're using the moving average. Now, I didn't audit this. I just kind of threw this together last minute, and see, there's that 1,800% trade right there. Start with $10,000. And here are the trades. And so you've got only 5 trades in 8 years, and then this one's still open from April 24th of 23. That's kind of cool. So if you put 10,000 in and then you parlayed that, or what's the word, compounded that, good or bad, but in this case it was all good, you can see it did fairly well. Now this was a losing, so you got 1, 2, 3, 4, you got 5 trades again. 2 were losers, but if you look at this one, you got in at 8,193, okay? And the high of the move was 14,000 round numbers, or 13.8 if you want to be more specific. So that's I should have done it earlier. I think that's a 40 or 50% move, but you still lost in the trade. So the point I learned from that, from looking at this system with Bitcoin, would be that you would definitely want to have a profit target or some kind of money management. If you're up 50%, then by all means, you probably want to take half of your shares off and then reset when you get back in on the next signal. And then right here, again, you could see, let's see, 54,007, and it hit 65,005. So that's 10,000. What's 10,000 divided by 50? Is that 20%? Should be, yeah, it's 20%. So you had a 20% move. That's nothing to sneeze at, especially once it's getting these higher numbers. So again, maybe some money management would work. Now, one thing that kind of shocked me was buy and hold actually wins by $1 million, okay? $1 million and change. And initially I was shocked, and I said, well, hold on, Dave. You got in or the system got in at 371.56, the same time the other system triggered a buy. So put them both at the same time, see which happens, see which one wins. And buy and hold beat the pants off of it. Now, here's the thing. The designer's intent of this system was to avoid the so-called diaper change moment. And that comes from Ian McAfee. That's when the market, like I guess yesterday was a diaper change moment for a lot of people in the market. For me, it was just a stomach ache and a lot of F-bombs. But anyway, the original thought was to try to avoid these diaper change moments. And this is how far the market dropped after you got out. So there's 50, let's say 1, 2, you got 3 greater than 50% drops. And this one was 67%. Now, here's the question. And what would the world be without hypothetical questions, said Mr. Wright. Could you really hold through a 70% drawdown? I don't know. I think even ludicrous would say that's ludicrous. I can't imagine anybody would do that. And this last trade, by the way, is still open, okay? So it's up 232%. Now, again, the reason it worked was because the market, if you squint your eyes or you look at it from across the room, the market went straight up. Yeah, it lost 70% and 50% or more 3 times, right? But overall, it did go straight up. So buy and hold will beat a system if the market starts here and ends way up here, obviously, okay? Longer term, though, it will not. And the other thing to realize is there's a value in sitting in cash and being out of the market, especially during a 70% drawdown, right? And so you could see that out of the 9 years that I calculated on this, you were out of the market about 3 of those years, or 35% of the time. So I forget what it is in a TFM 10% system, but it's probably very similar, where you're out of the market at least 30 to 40% of the time. And it's nice being able to sleep at night and not be in the market. So that's kind of the original designer's intent. This might need to be tweaked a little bit. Maybe those zones could open up a little bit, but the moving average is going to be so far behind, I don't think it's going to matter. And that's one thing that I can never wrap my head around. It's like, okay, well, how do we adjust for other markets, maybe with historical volatility or some other volatility measurement? Because the S&P 10% is such a good round number, but that moving average might be the key to that. Now, the zones, again, are probably less relevant at 10% because Bitcoin obviously can move 10% overnight or in one afternoon, or used to at least. So anyway, I'm throwing that out. No opinion. I'm not saying run out and do it. I'm not saying I'm doing it, but I do find it kind of interesting, and it does kind of help you wrap your head around why you do trade a system. You trade a system so you could hopefully avoid, especially a system like this, which is made to avoid diaper changes, you could avoid those huge diaper change moments. Anyway, we'll get to live crypto in a few minutes. Just real quick, as I've been saying, the Landry 100 is just 100 momentum stocks. And on this capture, I think it was only 98 because a few of them came out. And I was waiting for better stocks to put in. But one thing that was kind of fascinating yesterday is that, and again, to those new to this list, I'm just buying stocks at brand new 52-week highs, and I'll probably adjust that parameter down. God forbid we go into a bear market. But I'm buying it at 52-week highs. I don't think it would work if you bought just a few stocks. And I think Jeff last week, or I want to say last week, it was a couple of weeks ago, was talking about statistically, would you really need all 100? And I have a hard time putting statistics to things because markets aren't normally distributed. But I know, like in the S&P 500, I know some of these stock pickers that are fund managers, they actually put 90-something% of their portfolio, not all of them, but I know some of them do, into enough stocks to mimic the S&P 500, and the rest of the money they kind of play with. And that way, they're always right in line with the S&P 500 and don't lose their job. I don't know if that would work with a momentum list. And in general, I'm really skeptical of statistics. And the reason I'm skeptical is statistics are worthless. 74.5% of all people know that. Anyway, so everything's bought at new highs. But what fascinated me yesterday was there were a couple of these quantum computing stocks that are in this list, not in my own portfolio, unfortunately, that went up triple digits in spite of yesterday's debacle. Now, momentum does end badly, so a lot of these today came back in hard, like 30% or 40% after yesterday's big pop. So that's kind of an interesting thing. And by the way, the Landry 100 does not have any money management whatsoever. I've toyed with the idea of, like, if you're up 100%, maybe take off half, and that way you got a free position, free and outright position. So that might be something to kind of think about. Okay, let's skip through this. Okay, as I've been saying quite a bit, everyone thinks, again, when they become a trader, that they're gonna have this bam, this huge epiphany, and they're gonna think, oh, okay, I'm a trader now. The reality is, it's a million little things that'll make you a better trader. And this has been kind of fun for me because each week I'm like, there's another one of those little things that I need to be cognizant of, or I need to do, or I'm not doing, whatever the case may be. Now, I kind of touched upon this last week, and I want to expand upon it this week. So what's the worst thing that can happen early in your trading career? Now, don't answer the question, just think about that. And again, I touched upon this last week, and I want to carry that conversation forward. A few days ago, my wife was telling me about this girl she knows, and they were having lunch, and dogs came up because we just bought a new dog, or we just got a new dog, however you want to look at that. Costs a lot of money. Hadn't made that money up yet, believe me. But anyway, they were talking about dogs, and she said, well, you know, I got this dog a while back, and I started training it, and turns out I am really good at dog training. She was so good at it, she thought about becoming a dog trainer, or maybe kind of fantasized about it a little bit because she was so good at it. So her name is Caitlin, and she's a natural when it comes to dog training. So I want to show you a video here real quick. And she got a dog named Loki, and then she got another dog named Bobo. So I want you to pay careful attention to this video. And I just want you to watch Bobo, and hopefully the sound will come through. So let me play this. This is Bobo right here. This black and white, looks like one of those Australian type of dogs, right? Shepherd dog. All right, here we go.
Spin, spin.
So keep an eye on Bobo.
Bobo, sit, spin, spin.
Okay, so that's Bobo. Now, Loki was the original dog I was talking about a few seconds ago. So in this video, while she's training Bobo, I want you to pay attention to Loki.
Spin, spin. Bobo, sit, spin, spin.
So her first venture into dog training, she trained Loki. That was her first dog. And again, turns out she's really, really good at it. But she was very humbled when Bobo came along. So this is kind of a metaphor for trading. And I've seen a lot of people have this early success problem. So what's the worst thing that can happen early in your trading career? Well, my answer to that would be success, okay? Because you think it's easy and it's not. Now, number 715,033, your initial or current success or failure is not a predictor of future success or failure. In upcoming shows, there's a lot of, I'm trying to think of some of the people that have talked a lot. I think Eckhart has a lot of good quotes when it comes to this. And so I'll kind of fill in some of the pieces on some of these MLTs as we go along. But it's very true that if you're struggling, and I'm actually working on a piece on this, I've been working on a lot of stuff for a book I've been working on for years, but I call it's kind of like in my best Jocko voice. If you're struggling, good, you know, it's like good if you're struggling, because you can work with that. If you think it's easy, then you have trouble, and you likely will have trouble. You won't know what hits you. Years ago, I had a friend named Jimmy, had being a keyword in that sentence. He's no longer with us. And Jimmy was quite the character. And often when I speak in person, I tell Jimmy stories, and one of the Jimmy stories is he turned roughly $5,000, which I would later find was of questionable origin. I don't know for sure, but there's something fishy going on. He turned that into roughly about $1 million, and it was just the most amazing thing I ever saw. And he did it with options, and it was Micron, I believe. He was bullish on the chip manufacturers. He was bullish on memory chips. There was a shortage. He was in the industry. And so I guess kind of like a little bit of a Peter Lynch approach on that he took. And then he ended up just trading these options like crazy. And unfortunately, you kind of know where the story goes. He round tripped it. And when he was approaching right around $1 million, I told him, I was like, look, and this was back late 80s, I guess, early 90s maybe. And $1 million was still $1 million back then. And I told him, I said, look, if you're that good and not just a one-trick pony, I didn't say that one-trick pony, but that's what I was thinking in my mind. I was a little jealous, and I played a little micro. I played a little bit too. So his first, here I go to digress. His first trade, I remember he called me up. He says, if I want a stock to go up, do I buy a call or a put? I'm like, call. Sorry. He's all right. He hung up the phone. He goes, I got my broker on the other line. He wants to know if we are to open this position or close this position. I said, you want to open if you're buying a long option. But anyway, so I told him, I said, he's approaching $1 million. And I said, look, if you're that good, why don't you take out $900,000? Because his whole plan was when he hit 5 million, he was going to retire and live on a sailboat. That's what he was going to do. And while he was right around 1 million, I said, look, why don't you do this? Why don't you take $900,000 and put it into some kind of annuity that would pay you interest for the rest of your life? And back then, if memory served, interest rates were kind of high. And I seemed to do the math in my head, and I think he could have easily made 50 or 60 grand just on 900K. And that's, I don't know what he was making at the time, but back then that was still 50 or 60 grand. That was enough money, at least for him to live on, judging by the way he was living. Anyway, he says, I'm not going to take financial advice from you. And I guess he saw my struggles as a trader, as we all kind of struggle here and there. And it's like, well, it's not really financial advice. It's more like, don't be stupid advice. And I touched upon that last week. A lot of people had made all this money in a dot-com bubble, and then it blew up on them. Another quick story. There was a couple of years ago, in probably was 1999. In fact, I know it was 99, when everything was just going straight up. And there's a few of you guys here old enough to remember that. And it was great. You couldn't wait to wake up to see how much money you made overnight. And this couple they were realtors, and they quit their very successful realtor business because they were making so much money in stocks, and they were kind of like, why bother with this real estate crap, you know? And that's a shame. It's not like a business they could just sell, because it's something that my understanding is that if you're a realtor, you build your business over time. So I hated, and I never heard back from them. So I'm assuming that it ended badly in their case. And there's been many cases of throughout the years. One other one, just real quick, was I had a client that was following this arcane wave counting methodology. I think we know what that is. And I want to say it was 2008. And the trading service, we just would short and short and short and short. And that's all we had was shorts and shorts. And we started shorting in 2007 because that's all I could find was shorts for my people. And I actually apologized to him. Anyway, he made so much money because he was dogpiling on the short side with all this stuff. And his methodology was saying that we're going to have these waves down, and the waves were with the trend, okay? Well, when and I don't know exactly how much money he had at the time, but I know it was enough. I said, do you have a mortgage? He goes, well, I have a condo, but I have a mortgage on it. Yeah. I said, why don't you do this? Why don't you pay off your condo so you have a place to live? And if this super cycle or whatever you're talking about, or your arcane methodology is going to keep on keeping on, then just keep trading and then you'll make a bunch of money. And worst case scenario, you still have a place to live. Well, I hadn't heard back from him either. So I'm assuming that it also ended badly. So your initial or prior success or failure in trading is not a predictor of your future success. In fact, success can be kind of a dangerous thing. And this is where even if you've been trading for a while, when you hit it just right, the music stops playing, you find yourself thinking, what is it, the 5 most dangerous words on Wall Street? But it was working so well. It's 6 words, I think. But anyway, you get the idea. I spoke in San Francisco not too long ago. The great thing about being in person, there's 2 things that happens. One, when you go to a conference, you pick up a few gems here and there. It's not like you're just like blown away and amazed with everything, but you pick up a few gems from each person. You always get something good out of Linda, obviously, and there was a lot of other guys and girls there that picked up a little bit here and there. But one of the big advantages, in addition to those gems, is that you get to talk trading with a lot of people. And if you're nerd like me, that's pretty exciting. And I think it was David Keller, and there was like some newbies in there, like, what's the best advice you give a newbie? And I want to say it was David Keller, and he said, blow up as quickly as possible. And that really stuck with me. And I just thought that's a great thing to say. Not that you want to rush out and blow up, but if you blow up early on in your career, you're just like, okay, well, this is a little tougher than I thought. Let me dust myself off. I'm glad I didn't have everything I owned in this trading account like I would have if I would have been successful and just plowed it all in. So number 817,239, blow up as quickly as possible. Now, I may have jinxed Bitcoin because in X this morning, I was showing the Landry light. We had this nice Landry light that went on for a long time. Let me see if I can get that to plot in the background here. And again, Landry light, just lows greater than the moving average or highs less than the moving average. There's the spiders. You can see we gave that Landry light yesterday. Okay. So we'll take a look at Bitcoin real quick. And if you have any crypto you want me to look at, I'd be happy to do that. Although, what's crazy about crypto, and it's also a good thing, is the bull bear cycles are so quick. And that's why I tell people, if you're new to trading, trade crypto. Okay. You can trade $100 in each one. Start with $1,000, do 100 in each one. That'll give you 10 slots, and then go from there. And then you can get the money management in, you can get the reps in. I'm not saying that's all you should trade. And obviously, if you talk to a financial advisor, they would say I'm crazy. But the point I'm making is that markets are markets, and crypto is wildly inefficient, and you're going to get the reps in as a trader, not an investor, as a trader. And then longer term, I think the real money is still going to be in stocks. But crypto could be a lot of fun in the meantime. And I have one little lonely position left. I have this XRP, which I got in right here. I took additional profit targets here. And then I'm just kind of free rolling on the remainder of that, and we'll see how that shakes out. Anyway, Bitcoin, you can see the Landry light was 40 something, 45, I believe. And even before that, we had no downside Landry light, okay? So we just touched that EMA right there, it goes back to 0. So it's been green with just 1 day of 0 ever since, and let me get a crosshair in here, ever since October 2nd. So ever since October, for the most part, Bitcoin obviously has gone up. Little consolidation, little stalling out around 100. So we'll see what happens here. My thinking, as I said before, was if we get through 100, we'll go to 200 fairly quickly, but not without some fits and starts, unfortunately. And so I think what we're seeing happen around 100K is all the early adopters, people with tons and tons and tons and tons of crypto, or Bitcoin, I should say. I think they're kind of feeding the ducks while they're quacking. There's a lot of people getting excited. There's a lot of memes out there. They always come up with these memes, but it's like, Bitcoin 50,000, it's like the window's empty, and like Bitcoin 100,000, the window's all lined up. Everybody's wanting to buy. But these people who have a lot to unload, I think they know that it's a good time to, as Linda Raskin would say, feed the ducks while they're quacking. I think once that works through the system, we could see quite a run. Excuse me. Now, what we don't want to happen, we don't want this market to drop below this overhead supply, because there's a lot of people that bought in this overhead, in this range here, and they're thinking probably like me, is if we bust through 100, we're going to keep on going. And markets are seldom that easy. This is kind of a longer term prediction I'm making, but over the short term, it's going to have a lot of fits and starts. And the market, there's two adages, and I got them both from Linda. She said she probably got them off the floor. She didn't know where she got them from, but Linda Rasky, obviously, the market will often do the most obvious thing in the most unobvious manner. And if it's going to rally, it's going to have a big shakeout first and knock people out. And a corollary to that is, as I preach often, is a market will do what it has to do to frustrate the most amount of people. So it busts through 100, looking like the all clear, comes right back in, kind of sucks them in, spits them out, and then it takes off. So we'll see what happens in Bitcoin. Ethereum has been waking up a little bit in here, but unfortunately it imploded with Bitcoin. It looks okay longer term, but it is kind of interesting that we're now below the 30 EMA. And as I preach this 30 EMA, I love it. I really do. And the 20 EMA is pretty cool too. That's where I kind of cut my teeth years ago on EMAs with the 20, and I wrote the 220 EMA breakout system. But again, look at this this trend that was caught in with this Landry light in Ethereum, okay? And when you've got lots of Landry light, you want to be long. When you've got lots of downside Landry light, you want to be short. And when it's flipping back and forth, upside, downside, upside, downside, upside, downside, you want to be out of the market, okay? Now, that's an oversimplification, but sometimes it's just that. And the other thing, of course, you would do is you'd want to maybe draw some lines on the chart. So yeah, you've got upside Landry light here, but look at this market. It's not making any forward progress. Okay, it's working its way higher, but it's barely above this prior peak here. So pay attention to the Landry light in these things. Now, as I preach, sometimes you just come in and buy the strongest ones. Like, that's kind of interesting. I don't know if this is a new one to this exchange. It says Coinbase. Now, last week or 2 weeks ago at Bandcamp, I saw one, and I didn't take it, but that actually looks pretty good. So I'm going to go ahead and grab some of that real quick. Sometimes you can just buy the strongest ones that are making new highs, and I wouldn't recommend doing this in any market right now, at least other than crypto. So let me show you how I'm going to do this. So now you got to be careful, because sometimes they're not new. They're new to the exchange, but not in general. All right, so I'm going to buy at the market. All right, I'm long, and let me get a fill. 81 cents, 81.40. Wow, look at that, 81.40. All right, so here's what I'm gonna do. I'm gonna put a line in here at 81.40. 81.40. Well, that's a shitty fill, huh? 81.40. That's okay. It's gonna go up. All right, so I put a line right around that, just so I know where I'm long from. And then 0.8140, 0.814 times 1.2. I just take 20% profit of these. Keep the math easy for now. And stocks, obviously, I'm eyeballing the chart. I'm using historical volatility and other stuff. So 97.68. Let's just say 97.7. 97, close enough. 97. So we'll make this line here green, and that's going to be the initial profit target. And when that hits, we're going to take off half, or I'm going to take off half, and then have my stop at break even on the remainder. I'll put in a limit order at 977, and I'm gonna sell half of them there. So move. Kind of reminds me of, remember the SNL skits? Move. Now we're good to go. Now the other thing I'm gonna do, I showed this last week. I'm gonna make this one red. Okay, anything red hasn't hit the IPT. Now I don't want to make this look too willy-nilly, but sometimes, again, when these things are really gone, and right now there's only a few moving, so it's probably not the best time to be doing this. But sometimes you could buy the ones, ideally you want to see them making some new highs. I'm going to jump into stocks, and obviously we'll have a plethora of things to talk about there. I use that word because you guys like it. You tell me it means a lot. It's kind of gotten ugly in equities. One thing we were talking about is if you watch somebody made fun of me like 3 days ago on YouTube because I'm always talking about how mixed it is and everything else, and then all of a sudden the market crashes a little bit. It's like, okay, well, now you believe me. So I was cautiously optimistic, and that it bothered me that all these sectors weren't doing that well, and the leadership was narrow. And I don't do a lot, and I've got some clients, and I love that they do this, and I love that they share their research with me, and they put it in Facebook, most of them. I love that they do all this breadth analysis on the market. And I'm doing the same thing, but I'm doing it empirically by looking at a couple thousand stocks and a couple hundred sectors every night, a bunch of ETFs. And I know that the P's and the Q's and the comp have been doing really well, but in mags, but everything else hasn't, most everything else hasn't looked as well lately. But anyway, yesterday we had the big slide on the Fed, and yesterday was a bit of a throw the baby out with the bathwater because gold went down and bonds went down. The only thing that went up a little bit was the dollar. So that's, I'm not gonna say a good thing, but it wasn't all bad. At least there was some flight to safety into the dollar. But anyway, now it's a little bit concerning in the P's. We're down below that 50 simple. I wouldn't call them down and out just yet. Longer term, the uptrend looks pretty good. Squint your eyes, you can't even see that, right? And I was kind of amazed looking at some of the weekly charts, at least up until recently, that even with this little spill in there, they look okay longer term. But we're right below the 50. Nothing magical about the 50 or any other moving average. 50 simple, but it is well watched. So hey, use the word hope, but hopefully we stabilize in here. One concern though is that you always want to look at a net basis when comes to market. So we're at 58.69. When were we at 58.69 last? Okay, way back in the middle of November. So now we've got November. I'm sorry, was that October? Yeah, we got October. So we have November, December. So we're looking at 2.5 months of no forward progress based on yesterday's spill, at least on a net basis. Just for S&Gs, let's take a look at the linear regs. Okay, you can see linear regs are starting to, most of them were headed higher. Linear regression is just what I do with I eyeball or occasionally draw a trend line through the bars, but this is the mathematical representation of that. But you can see the shorter term linear regs are beginning to roll over. And this is something I don't do a lot with. It's just something kind of fun to look at every now and then. I know you're going to party with me. Anyway, so there's the P's. Let's take a look at the NASDAQ. And if you guys have any individual stocks you want me to look at, start putting them in now. NASDAQ Composite, a little bit of an opening lap today, but unfortunately came right back in. It made these multi-month lows or closed at multi-month lows. It looks a little bit better than the P. So far, it just looks like kind of like a knockout move. But any additional weakness would be concerning there. Rusty's always a rub. Huh? It's like it finally got gone, finally made all-time highs. Yeah, right to all-time highs, and then it just kind of I almost said, what's her name? Amber Heard. I almost slipped up and said that. Hey, Craig. Hey, Craig. Craig's our resident dog trainer. What'd you think about? Did you see the dog video earlier? I was hoping you'd be here tonight. Anyway, Russell 2000 started strong, ended weak, and it's right here, multi-month lows. And look at your net here, how ugly that is. And again, just start where you are, okay? Start to close and draw your line backwards in time. Look at that, okay? So on a net basis, we hadn't made any forward progress in this stupid Rusty since July. So that's not a good thing, obviously. EFA shares, these are the foreign shares. They're breaking down too. We sneeze and the world catches a cold. So that's certainly not a good thing. Some of these stronger areas like internet basis the FDN, and this might be a heavily weighted ETF. I don't use it too much, but it got whacked yesterday. So far, that just looks like a TKO type of move. That actually looks pretty good still. Like I said yesterday, no place to run. Yeah, keep the stock picks coming. No place to hide. A little bit of a pop today if you squint your eyes in gold, not enough to get excited about, but gold's looking kind of ugly, and gold stocks are looking much, much uglier. They're beginning to break down in earnest below that 200-day. And you can see we had a bow tie to the downside here. So far, we remain in bow tie downtrend, proper order. Broker dealer was looking pretty good, but then they just kind of slowly rolls over. And this was the net thing I was talking about quite a bit with broker dealer. We were looking at it the other day, and we're like, look, where is it now? Where is it a month ago? Okay, it's lost steam. And sometimes the market will lose steam, obviously, and then take off again. But you always need to be a little cautious when that happens. So we're down below the 50. That's beginning to look questionable at best. Biotechnology had broken down a long time ago, and it's got a lot of overhead supply to deal with. So not looking so hot in biotechnology. Closed at multi-month lows. And then just random sectors like infrastructure, you can see closing at multi-month lows, bow tie, proper order, almost. Yeah, bow tie, proper order, meaning that the 10 is less than 20 and 20 is less than 30 for the downtrends. 10 simple, 20 exponential, 30 exponential. I don't know what packages have it. I think Metastock has it built in. My bow tie proper order, I think it's called Landry proper order, and Stock Charts has it built in. And a lot of people have coded a trading view code and some other ones. And I could ask my peeps in Facebook if y'all looking for some code for some of these things. Software is getting a little questionable. Software had been hanging in there, although the Media General software group hasn't looked as good as this group here. I'm going to have to dig into the ETFs here and look at the components and see why this has been kind of a leader. But that's starting to look a little toppy. So even these stronger areas are looking questionable at best. Defense has recently rolled over. We've got a bow tie to the downside there. It looks like Moo's starting to move. That'll be fun to watch. And you can see a little bit of a bounce today, but I wouldn't get too excited about that. Transports all the way down below the 200-day moving average. I don't spend a lot of time working with a 50 simple and the 200-day simple, but when the market becomes questionable like it is now, I will pay attention to those moving averages because they are well watched and they give you a good little reference point. Banks, they were one of the leaders not that long ago. Now they're beginning to bow tie downside. They've come all the way back to where they're broken out from. So that's a bummer. So pay attention to that quite a bit in the markets now and forever. When you have a market that breaks out and gives up 100% of its breakout, that is usually no bueno. Insurance, you can see beginning to break down. That was a leader just a few weeks ago, okay? Now, MAGS, this is kind of indicative of the narrow leadership we've been seeing. MAGS has been doing pretty good, and somebody said MAGS, started calling them MAGS 6 because one of them isn't doing too well. I forget which one that is. But you can see MAGS actually ended a smidge higher today, so that's hanging in there. That's the good news there. Retail looks okay overall. So far, just pulling back. Additional weakness would be of concern. So you kind of get the idea. A lot of ugliness out there. Major drugs remaining in a downtrend below all those major moving averages. Now, somebody was saying something about SMH. Yeah, the SMH closed below the 200. Follow through matters. Yeah. So one thing, and I don't know if you saw the service tonight, but one thing I was talking about the service is we do have a little support here. That in and of itself wouldn't get me too excited about semiconductors because why? Well, let's draw a line. Where are we now? And where were we last time we were at this level? Okay, or how far back can I go and intersect this level? You can go all the way back to July. Okay, so semiconductors have been disappointing. If you've been following me for a while, you know I love when the semiconductors, when the indices are rallying and the semiconductors confirm the rally. And somebody made the argument a while back, or 20 years ago, I should say, that it used to be the transports, and now the semiconductors is kind of like the information superhighway. Information is being moved around and all. So kind of an interesting analogy. But I think semiconductors are important to confirm the overall market, and that hasn't happened in quite some time. And I've been doing a lot of thinking lately, and like one of my returning clients was like, hey, 5 stock setups in 5 months. Well, 5 did trigger. There were many more than that, but entries kept us out of quite a bit. And I did a presentation, I think 3 weeks ago, 4 weeks ago on that. But anyway, now I don't feel so bad about not having tons and tons and tons of stock on through this crazy period. The other thing I did a few weeks back to show the point was that, yeah, the market would higher, but was kind of all over the place in the process. It rallied, it sold off hard, it took off again, it sold off hard, and the zigs and zags have been kind of all over the place. Come on, you can do it. You can do it. I'm gonna blow in the candle here. Oh, come on, you can do it. Come on, move. Do it. Do it. Pay me. Border collies. Yeah, those are border collies, Craig. So yeah, it's border collies are smarter than your average fifth grader. Yeah, you specialize in border collies, don't you? Yeah, they're wonderful dogs, but they look like they are a lot of work. Those working class dogs. Of course, we just bought a golden retriever. I guess that's somewhat of a working class dog. Anyway, bonds, no place to run, no place to hide. That's looking kind of ugly there. I hate to see that happening. Dollar, one of the few areas that's going up. Dollar's looking okay. I'm just going to plow through these real quick. Home builders imploding, materials imploding. Telecom looks okay, but when you look at the MG Telecom, which is probably a little broader, you can see you have a head and shoulders top, and then you have all these bow ties to the downside, so that's looking kind of ugly. Energies banging out new lows with a bit of vigor and a pretty serious slide. Financials, bit of a bummer. They were doing pretty good. Now they've given up 100% of the breakout. Remember, we just talked about that. That's important there. Real estate banging out some new lows with a bit of vigor. Utilities up a smidge today, but they've been imploding as of late. Health services banging out some new lows with a bit of vigor. That's 1 year plus lows. I wouldn't say multi-year lows, but close enough. Consumer discretionary has been doing pretty good. Bit of a knockout move. So very narrow leadership now. That could obviously change quickly, but for now, looks like market could be in a little bit of trouble. But let's just see. The weekly charts still look pretty good. You just saw the Qs and the Ps. Okay, Nike probably not gonna like it. Yeah, yeah, it's all over the place. Nike tends to trade all over the place. HV is 22. Some of the stocks we're long have HVs of like what's 122. That's crazy. So it's kind of all over the place. You had this big gap here, and markets have long memories. So you have this gap down, and then you have this overhead supply. And somebody asked me about overhead supply, like how far away and how long. Well, if it's 100% away, maybe it's okay to trade a stock. And if it goes up 100%, hits the overhead resistance, that's a good problem to have. But keep in mind that markets have long memories. The further back this is in time, the less important it is, because people unfortunately die. There's tax loss selling and divorce and other stuff like that, which causes a lot of stocks to be distributed over the years. But kind of interesting from a nerd perspective that it rallied right up to that overhead supply and then died out. It's going sideways. You don't want a stock that's going sideways, okay? And you don't want a stock that's wide and loose. What you do want is to go in and look at those mystery charts. And that's the best I can find, believe me, in the market. And those mystery charts, you've got a nice uptrend. You got to pull back to that moving average. It's all kind of textbook, whereas this is just kind of electrocardiogram, so not much there. Cost, yeah, cost looks pretty good. My only problem with cost is it's a very mature stock. The HV is only 17 on that. Where's the spiders? Probably a little more. See, the spiders are 12. I believe in order to beat a market, now I've seen some research that claims to contradict this, but I disagree with it. I don't want to get anybody in trouble, throw them on the bus. But the way the best way to beat a market is with stocks that are more volatile than the overall market, okay? And you can make that argument for any market. You want to be in the more efficient aspects of the market as opposed to the efficient aspects. So if it's trading with an HV not much more than the S&P 500, it's probably a fairly efficient stock, okay? Now, with all that said, it looks okay. It's pulled back to this prior little breakout pullback here. So I don't like that particular pattern, although I have a client who just did some research that questions that statistically. But again, I have trouble with statistics. wrapping my head around when it comes to markets, which are based on emotions, okay? But I'm willing to learn, okay? I am trainable. But you can see so far it's pulled back. It looks okay, but it's pulled back to this prior area. I would pass on that, but it's not a horrible looking stock, okay? It's an okay looking stock. But again, I usually cut off my HV around 25 or so. And when I get to about 27, 28, I just start plowing through the charts really quickly because usually there's nothing below 25 or so that's going to be uh, exciting for me to trade. Every now and then there's an anomaly that can occur when you have a very persistent market, because persistent markets tend to drop in volatility, and that is statistics there. Okay, any more individual stocks that you guys want me to look at? While I'm in impasse, obviously I want to thank all you guys and girls for attending tonight. I appreciate you taking time out of your schedules. Anything unanswered, I'm watching the screen. Anything unanswered, Landry.com. All right, going once, going twice. All right, thanks again, everybody. Oh, by the way, probably I won't do a show next week because of Christmas, and likely not another one first week of the New Year, because New Year's, it's hard to get a show together on holiday weeks. And I'm just going to take a break here for a couple of weeks, but I will return early next year. Everybody, all you people in Facebook, I'll see you tomorrow. Everybody else, Merry Christmas if you celebrate. Happy 25th if you don't. And Happy New Year. Again, thanks again, and may the trend be with you. You're welcome. Thank you, Dave. My first session with you. I learned from it. Oh, fantastic. Oh, fantastic. I hope I didn't beat you too much up on your on Nike, but I have a kind of a specific methodology I try to follow here. Thank you so much.